And there's three patterns on our highlights. First of all, we talk about a sideways market. This is what they call range trading. Remember, there's two kinds of markets always. You always need to establish that for yourself. First question you ask yourself, what kind of market are we in? Are we in a trending market or are we in a trading market? Okay, a trending market, the trend is definitely up or definitely down. That's a trend. A third of the time, the market's moving sideways. It's what we call consolidation. I call that range trading. It's when the market's moving between an area of resistance and an area of support. Okay, as in highlighted. Let me just get my cursor again quickly here. There we go. So there's area of resistance. It's usually a round number, and there's my area of support. Okay, so we're moving sideways within this range. And eventually we're waiting for new, because remember, we've got the buyers and sellers having a bit of a tug of war. We're waiting for new information. The information is positive. We break out of this the sideways market, and that's where we get into the trade. Okay. Now, it does sometimes pull back, is what we call break and kiss. So it breaks out and comes back and kisses previous resistance. So previous resistance will become the new support level. Okay, so you must anticipate this, and this does happen. Okay, so it comes back and kisses it, and then it'll bounce off. If it doesn't, it breaks through this, and then obviously that's where your chart pattern fails or your trade is off. So some people like to put a stop just below this. I like to put a stop way down here. Okay. So you need to be able to handle those drawdowns. Okay, so this is where you'll go long on a breakout, on a bullish trend. If you want to go short, here's a sideways market. We're hitting a support level. Eventually that support doesn't hold and it breaks out through that on increased volumes. That will be your confirmation. Okay, that's where you'd go short. Now again, some people will put their stop just slightly above it. Depends how conservative you want to be. I might go as far as way up top here. Okay. But I'll be watching it very, very closely. Again, it breaks out and comes back and kisses it before it says goodbye. Okay, so this is one of the most popular patterns I like to look for. I try and scan for these kind of patterns, and I explained just now how I do it, and then I wait for this little pattern to form, and I wait for the breakout. So this is what I call a rectangle formation. It's a continuation pattern. Remember, this can also be a bit of a complex triple top. Can move from the bottom, move to the top, and eventually bounce up and then break down. It always is a complex triple top. So you need to act only on the breakout. So there's some confirmation rules. Some people like to wait for a 2 or 3% increase before acting on it. So I look, my criteria must close above the previous resistance level. Okay, yes, I'm using a line chart. You might use a bar chart or candlestick chart. And also the candlestick chart pattern also give me an indication what's happening. Okay, let's move forward on to the next one. The other pattern I like to use often, and this is my favorite, is triangles. This is a symmetrical triangle. Again, it's a consolidation, moving sideways. Remember, it's a continuation pattern, so it comes from the bottom. Let's put my cursor again. What's nice about this pattern, I know where it's going, and also I know the trend, and also know where it's going. So it's coming from the bottom, moves sideways through the little triangle pattern, and breaks out. But it continues on its original path. Okay, so that's what's nice about it. So I know where it's going. I know the trend is up. Most of us get the trend wrong, in the sense that we're on the wrong side of the market. We think it's a rally or a correction, and we're on the wrong side of the market. What's nice about it is also a triangle is you can actually measure the height, and from the breakout you can project it where it's going. So let's say that was 10 Rand and that's 15 Rand, so you've got a 5 Rand spread there. You're going to add 5 Rand on the breakout from there, and we're going up to 15 Rand. Okay, so you know where the trend is, where the market's going, and you've got an idea with regarding price projection. Okay, very, very high probability indicator. Remember, you want to confirm, you want to see higher volumes on the breakout here. Okay, some rules also must touch at least 3 times, and ideally break out at least 2/3 of the triangle. Sometimes it breaks out right here, and then you'll see some examples just now. The idea is just to get the idea across to you guys. Okay, that way it's breaking out near the apex. So those are 2 continuation patterns. Some of you might use what they call reversal chart patterns, and the most famous one is what they call head and shoulders. What I like about this one is that, again, you can use it as for anticipating or projecting where the market will be going. So here's your left shoulder. Let me just draw my little cursor in again, my spotlight. There's my left shoulder. It comes back. My next rally is higher than the first rally. So it still tells me we're in a bullish trend. Pulls back again, bounces off a support level, rallies again, but my next high, my next resistance level is lower than the previous high. Okay, and then we break out. The idea is that we're going to draw a neckline, a trend line. We call it a neckline, connecting the two support levels together. And the minute it breaks out through that trend line, as the word implies, the trend is changing. That's where you'll break out. Okay, you only act on the breakout on increased volume. So I want to see some panic selling coming in. Okay, so that's at the top of the market, trend reversal down. Bottom of the market, just the inverse head and shoulders, same criteria on the breakout of that neckline. On increased volumes, I can also still project where the market's going. So you've got about 80% probability. Let's say, for example, you've got a sell signal here at 10 Rand. You've got 80% probability of going down to, and this is a 2 Rand spread here, 2 Rand difference. You've got an 80% probability of going to 8 Rand. Would you go for it? Yes. Okay. Where would you put your stop? Some guys put a top here, some guys put a previous high. But it's always important to put your stop in place. Okay, so I know what price I'm getting in, I know where my stop is, and I know where my target price is.